Welcome everybody to our long verticals and diagonals webcast. I'm Connie Hill. Happy to join you here each Thursday at this time as we just totally focus on those two strategies. And I hope you're getting more comfortable with them. Both of them are a little bit more advanced. And I think with the diagonals, it takes a little bit more time for you to maybe do the entire trade because sometimes they're a lot longer. All right. Today, we're going to focus a little bit on some numbers. And I think after we go through some numbers on one stock in particular, hopefully you'll start to get a better feel for how diagonals can work for you. All right. We'll also be reviewing different diagonals as well as long verticals today. Hope you're following me on X. I'm Connie Hill CS. And we have the pleasure of having Barb Armstrong in the chat today. Barb's a fellow coach and great friend. She's here to help me field some of your questions that you might have. She's obviously very well versed in these strategies. And so as you have questions, let us know. I'll keep my eye on the chat. Barb will as well. We want to make sure that you do get your questions answered here today. Let's go through our disclosures and get this show on the road. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for educational and informational purposes only. Don't consider it a recommendation. We'll be using the Paper Money software application. It's what you download to your desktop. It's the most robust version of Thinkorswim. It has a lot of nice things for option traders, which of course we are, especially in this class. Past performance of any security or strategy does not guarantee future results or success. One thing that's important for you to know is that the Paper Money application will not assign a short option position early. However, in a live market, it can. When we get into those types of scenarios, I try to point it out to you that, hey, in this scenario, we really could have been assigned early, even though in paper, we weren't necessarily assigned early. All right, have a couple of announcements to go through here. And of course, we're going to dig into the details of these long verticals and diagonals. The biggest factors on option pricing has to do with price, time, and volatility. And so as we're looking at each of the trades, we'll reference those concepts. All right. Stay Gold said verticals you're feeling good about. Diagonals, no. Okay, that's all right. That's a good reason to be here so that you do get your comfort with diagonals because they're a little bit more of an advanced strategy. Now, if you're here new today, welcome. Glad to have you here. Hope you have some exposure options so you'll be able to follow along with our discussion here today. All right, we are going to take a quick look at the market, see if the SPX is up or down on us. It was a little of both so far earlier today. And then we're going to really head into the trade management piece. This is I think, where you learn the most is when we take some time to go through the details. You guys have been really good about responding to the surveys that we have. And one of the comments I get back is frequently, and sometimes in the chat, is we spend a little bit more time talking about the decisions to roll or to change up the trade in a little bit more detail and with more specifics. So that's why we're going to be doing that here today. All right, let's head over to our Thinkorswim. And got the SPX up here. I've got a 10 and a 30 simple moving average for us. No, I take that back. The 10 is an exponential moving average, which means it's a little bit more reactive than a simple moving average is. And whoa, would you look at that? The SPX put in another all-time high today. It almost got there yesterday, but today it looks like it's eking that out. So we're still up in the market a little bit, 0.08%, so kind of flat on the day, but made that new high. Did the NASDAQ make a new high today? Let's go check. It too made a new high. Now, sometimes you're wondering, you know, when we have huge candles like this, pop, 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 you know, really, if we're talking about a price pattern on that, we'd go, man, that is a long, tall flagpole. And after we have a flagpole, what do we look for? Look for a little pullback, right? Look for maybe a little bit of a diagonal pullback. Let me just do a little drawing here. Might go something like this, right? Where it trades in here and then we wait for it to break out. Or sometimes it'll trade flat like this. And we call it like that, looks like a flag in a stiff breeze, okay, because of the angle of it. So, or we don't know. Day is still pretty early. We could still get some extension on our flagpole. Don't know yet. Or it could start to consolidate. So just be looking for those things, okay? And thinking, well, how can I approach it? And when we see this type of activity in the indexes, we're going to see a lot of it on our individual stocks as well. Okay, so if we see flag patterns emerge, whoa, we're probably going to be seeing some flag patterns on our individual stocks. Let's take us through some trades. And as you have been trading along, there are several of you that are doing these example trades in your paper money account as well. When you have a question that maybe you've run across during the week or as you've been doing the trade, feel free to let me know, okay, on that. Let's see, what did you say here, Kelly? I get too many and lose them before I get back filling them out of the survey, sometimes with the surveys. That's okay, Kelly. We appreciate the input every single one of you have given us in our surveys. We like to see what you're thinking. Okay, let's head over to, we're going to head over here to the monitor tab. Going to come to activity and positions. And I have this kind of cleaned up a little bit. Let's start out with a couple of positions we put on last week, a couple of long verticals. We have Dow, where we did a 40, 42.50 call spread. Looks like we're down on it a little bit here. Today, it's made a nice move in our direction, which would give me the idea that it's probably moving bullishly today. We'll go take a look at its chart, and it looks like on FANG is working the direction we wanted, another long call vertical. They have clear till May 15th, so we've got plenty of time on these. So this one's off to a decent start. This one looks like it's recovering. Let's go look at the chart real quick. Bottom line is we're going to let them both work, okay? Let me zoom in here. This is where we got in last week. And I don't remember how high we were on this candle at the time that we got in. But in any case, let's suppose we'll go from the closing price here. We were looking for this to be a nice little bounce. So I imagine it was looking more like a bullish candle when we got in. It's kind of gone sideways a little bit here. So not too surprised that we're down on it a little bit. Here's our 42.50 short leg that we want the stock to move towards. And we have plenty of time. So we're not panicked. We're just going to give it a chance to work. On FANG. This is an oil stock, Diamondback Energy. And again, here's the day we got in. I think it may have been a little bit more of a bullish candle at the time we entered. It's kind of gone flat here as well. So even though the market has shot up, pop, 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 this being an oil stock and oil pulling back a little bit, this one's kind of gone a little bit sideways here, but we only need it to go to 190 and beyond. So do we have time for this to work? Absolutely. We're just going to let it continue to work. It's off to a slow start, but not a bad start. Some of this sideways action and what's helped us probably is a little bit of time decay. Where we sold that short leg, we have a little bit of a buffer. If we were just long the option, then we'd be kind of down on that trade. But because it's there as a hedge, kind of helps us out a little bit. Okay. Let's see what's next. Let's talk about some things that have occurred that I forgot to tell you about. Well, they weren't that I forgot to tell you about. One I forgot to tell you about last week was Alibaba. Okay, so we're going to go to Alibaba. On this particular trade, well, let's get the right letters in here. All right, here's our trade. We did a bearish trade, and we did a long put vertical. It would have been due to expire this week, tomorrow. We got in here, we were getting in on this bounce down. It was bouncing off the 10-period moving average. There was a little bit of support in this area. So, coming back here, some short-term support. So it kind of went sideways for a little bit, but we had an order in to get out when we had a chunk of the gain on the trade. We let it sit there and it executed here on the 2nd, which was 2 weeks ago today. On the 2nd is when it executed. So on that particular trade, it was a decent profit for us. If we look at the numbers here real quick on account statement, we bought it for $1.30. It was a $3 wide spread. So on a $3 wide spread with $1.30, then what did we have to gain? We had to gain what? 170. So risking 130 to make 170. And so we said, if we get a chunk of it, let us get out. And so it did. It executed for us pretty early in the morning. So we got out at a price of 175, which gave us a profit of about 45 bucks a contract. And we had 15 contracts. So that worked out to about the neighborhood of 675, not including commissions. So not a bad trade for just a few days to be in it, in the neighborhood of about a week. All right. Next one up. We did a calendar. No, we did a diagonal last week on Amazon. Okay. We were looking for a little move because Amazon had not really moved around all that much. It was just kind of sideways here. It had the big pop. And what happened is it continued to go. And we really were, because it was a diagonal, many times with those diagonals, we're not looking for really big moves. We're looking for smaller moves. This thing totally took off. Okay. And had a much bigger move than what we really would want to have in that trade. Now, I'm going to show you what the decision looked like the next day. This is a picture. Let me zoom it up maybe even a little bit more so you can see. This is a picture of the risk profile. And we looked at the risk profile going into this trade, and we could see if it had a peak point up here at our short strike price at our 235, that's where the peak profit would be. But if it moved down too far or it moved up too far, what happened with our profit and loss line? We started to lose profitability. So Amazon really took off on us. And I could see us moving from here, clear out to here, to where there was not a lot of profits left to be taken. And it looked like it was going to continue to move. So we closed that trade down really early. We had a 102 profit on it, which is not the end of the world to have a small profit on it, 100 bucks. But what I wanted to show you here is what the risk profile looks like now if we had stayed in the trade, because it could have created a big problem for us. We're going to go to the Analyze tab, and we're going to put in, I'm going to link this so it goes to Amazon. And so the price of Amazon right this minute is $247. Where's 247? Well, it's kind of close to here. There's a little teeny notch right here that's really hard to see on my screen that shows you the live price. But that's where the live price is. So our profit and loss at expiration, which is the teal line, would have been negative. Our profit and loss today on the purple line would have been negative had we stayed in that trade. Okay. And sometimes you have to make quick decisions like that. We really didn't want Amazon to move a whole lot. We thought maybe it would stay kind of, around in here, and it didn't. So that was an example of getting out early because the trade was starting to go against us. And we're glad we got out, right? We're glad that we're not down here where profit and loss at expiration is negative, as well as on the current day. All right. Any questions on Amazon? I don't know how many of you decided to do Amazon with me. CB, we will get to FSLY. Most definitely. All right, let's move on. Next trade. Okay, we'll do FSLY next, because that actually is next on my list. Let's go back to our charts. Let's see what FSLY looked like. And let's come on over. This one we have not been in a lot. We were only in it. We got in here on the 6th of April, 2nd of April, take it back, 2nd of April here. We did a 30-35 long call vertical that would expire May 15th, okay? And it just needed to move a little bit. I mean, we got in this day and had plenty of time for it to go and move above 35. It almost got there 4 days after the trade we got in. But then it started to show some major weakness, okay? We started to see a small little profit start to melt away. And so when I was looking at it and it was down by about 50%, then that's when I decided to pull the plug. So on this candle that we can see started turning into a big bearish candle, we went ahead and got out of the trade. Let's go look at the numbers on Fastly. So we got in at 210. And so, you know, we were hoping to have a pretty decent gain because it was a $5 wide spread. But then when it got in the neighborhood of only being worth about 50%, we actually got out of I'm going to say a sort of decent price. We ended up with a loss on that. It was a loss of about 78 cents or $78 per contract. We had 9 contracts. So that was a little bit of a loss. It came out to 702. Now we typically want to keep our risk not risk more than 2,000 in any trade. So we can feel good about that aspect, that we didn't let it just go along for a long time and be in a situation where you're like, man, there's nothing left of this hardly. Okay. So that one did not work out in our favor, but that's what happened with us, with it, I should say. Looks like there's a survey out in the chat. And somebody had mentioned in here, sometimes the surveys come in waves. You're right. Sometimes they do seem to come in waves. So it's another opportunity for you to give some feedback on our session here today. Okay. 2 questions, multiple choice, pop on the radio button, you know, on a scale of 1 to 10, boom, boom, you're done. If you would like to give me some more information about what you'd find helpful in our sessions or any other piece of information, or maybe something you're struggling with, go ahead and put it in the space where you can write down an answer, and I'll know maybe you're not answering that question, but wanting to know about a specific thing. So feel free to use the space for that as well. Let's do one thing here on Fastly. Looking at what time of day did this happen, let's go to our account statement here. And we got out at about 7:40 in the morning. So my market opens up at 7:30. So just 10 minutes after the market opened up is when we decided to get out of that trade. What did it look like on that day? Let's go to a 5-day, 5-minute chart. And this hopefully, CB, will help you out what you're trying to find out here. And let's go back to the day that I've got all marked up. There we go. There's the day we got out. And this is what things look like. So early in the morning had a huge bearish candle. This grayish area is pre-market activity, okay? And I don't remember what the news was on these guys because they had been trending really well. So this is the first 5-minute candle. This is the second 5-minute candle. And then this is the third 5-minute candle. So our trade we put in about 7:40. So it was somewhere along in this candle where we'd really seen huge manifestation that it was showing major weakness. And so just kind of taking that opportunity to get out, salvage what we could out of it. Okay, hopefully that helps as we look at that granular detail there. Let's see on the diagonals. Yeah, CB says, appreciate it if you'd review the diagonals. Oh, well, AMD and NVIDIA. AMD, we're going to do a lot of detail on. In fact, it's going to be next. This is where we get a lot of math in our class here today. We've been in AMD for a fairly decent period of time. And let's maybe come out here to say just like a 3-month chart. And this is when we got into this particular trade. It was bouncing down off of this 10-period moving average. It had been looking, kind of a little bit more sideways on this particular one. And so let's run through the numbers. First, I'm going to show you what it looks like right now. And each of these kind of mint colored green marks on these days are when we sold again against our long put. Okay. So as we come over here, we'll go to the account statement, and we initially got into this trade on March 12th. Okay. On March 12th, we bought a long 195 put that didn't expire until May. And then we sold a front week put here, which was March 20th. Okay. This is our longer dated option here. And so it cost us about $17.20, but the idea with those diagonals is we sell premium against it. That longer leg is kind of acting as a hedge leg, and we're trying to see how much premium we can calculate off of it. Okay, so I'm going to run through these sort of quickly. Okay, on the 18th of March, so about 6 days after we got into that trade, we did what? We bought back the 192.50 put that was short, and we rolled it to a 197.50 put. We bought this one back for 95 cents. So bought it in 480, bought it back for 95 cents, pretty decent gain on it. And then this is the new credit that we brought in, 490. Okay, so the next week, what happens on the 26th? On the 26th, we were able to go buy back that 197.50 put for 51 cents. So we collected 490, we bought it back for 51 cents, made a majority there. I haven't calculated the return on every single one of these, okay? Rolled for the 200 put, brought in 385. Well, the 200 put on April 2nd, which was a couple weeks ago, we were able to close out of that for 3 cents. So that's pretty good, right? Collect 385, buy it back for 3 cents, be done with that option. Roll to the 210, we brought in $5.10. Now, of these trades up to this point, we were closing down the short leg, or buying back the short leg, selling a new short leg, and we were doing it as a diagonal. Okay. Sometimes you will execute on these trades all at once like that, doing this rolling mechanism where we're doing it in just one trade activity. Or sometimes we're going to do like the next put was. Okay. So this 210 put, we went ahead and bought it back for about 40 cents. Not too shabby, right? And then kind of in a separate transaction, a little bit later in the day, I think initially when I went to roll it, I wasn't sure that I really wanted to roll it in that time, but a little bit later in the day, we decided to. So we sold the 227.50 put, brought in 55 cents. And then earlier this week on the 14th, we were seeing we could buy it back really cheap. So we did. We bought it back really cheap for 31 cents and sold a new 245. Okay. We have several credits going on here. And if you want, you can take the time to add them up. I did the adding earlier. Okay. And we started out with a kind of this 1240 debit. Although I'm going to just kind of maybe stick with the 1720 here for that long lag. We, in our rolls, were able to collect up to this point $22.50 on all those little rolls, those little transactions, $22.50. And I subtracted that from our initial net debit of $12.40. And on that at this point, we are up about $1,000.10 or $1,010. Okay, it was, if we're using the decimals, it was 10.10. You multiply that by 100. So in reality, even though we don't see the numbers out in the activity and positions because they're closed, that really tallies up what has gone on this trade. And so I hope by seeing the detail here and being able to go back and see what we did and follow through, it'll give you a better idea about how these diagonals work. I should say, or can work, okay? Sometimes we'll use them in a covered call-like manner with some calls. And in this particular one, what's interesting is we had this hedge leg of the 195. And so in this case, the stock actually went and turned really bullish on us. And because we were selling all this premium, that's a bullish move. That's why it's become a little bit more profitable for us because we bought our hedge leg down here when it was cheap. And then now it's just sell against it, sell against it, sell against it. Let me check your questions here. Is somebody, CV saying, if you have a trade plan, would you exit according to your plan rules? Oh, Barb's helping you out with that. Sorry. Yes, she would. Let's see. Oh, Lola wants me to share the liquid option stock scan. Yes, I can, because this is now our new list of stocks that we're working with for the next month or so. What would your strike election be if I were going to be rolling AMD today instead of 2 days ago on the 14th? Well, let's look. We would come out here to the trade page. And what's nice about these stocks that have weekly expirations, it gives us that opportunity to be a big seller of premium. So this is the one that I did. I did the looks like 245 this time. And at the time, I mean, right now it's at about a 10 delta. So we'll probably do something maybe because it's had a couple of really big moves since we put it on. We might come out here too. If somebody wants to be, I'm going to say somewhat aggressive, maybe they sell the 270, which is about almost $5 away. Or they might sell this one. I'm a little concerned about the open interest, so maybe not the 267.50 since, but there's been 1,000 contracts today. So never mind, these are okay now. As we add the volume in, there's a lot of activity today. So yeah, somebody could maybe do a 270, 267.50. If you like the comfort range of selling a 30-something delta, then you might go for the 265. Okay. Now, some people might want to be very conservative and go way out of the money. This is kind of an expensive stock, so we're allowing some of these premiums in the 20s and 30 deltas to pay us pretty good to sell. It's kind of the approach that we've had with this trade. If you want to be more conservative, definitely could sell further out of the money. Okay. All right, I think, have we caught everybody's question here? All right, Lola, let me share that scan with you real quickly. All right, let's come over here to the scan. Actually, I'm going to come over here to my tools, and I'm going to say ones that I've shared in the last month. And let's see, this is probably the right one, 49. That was when we did that. So I'm just going to copy this out. And if you did not get this scan, it's actually just part of the scan because we had it intersect with the NASDAQ 100 and the S&P 100, I believe. And so the actual query is only going to be showing you scanning through one of those. So you'd want to change that up and combine those two watch lists together. If you're not really sure how to combine the two watch lists together, go back to last week and we showed you kind of that process, how to do it with Excel, and then just doing an import in. All right. Next up, want to show you something that is something new that we're doing that some of you might be interested in. There's been a little bit of activity with this. Let's go to, let me make sure I've got the right thing here. I do have the right thing. We have a new class that we started out a couple of weeks ago. It's called New to Investing. And it's really designed for people that are super new to the market. And what we're doing some promotion with helping teens get started in the investing world. How many of you have thought yourself, why didn't I know this stuff sooner? I thought that when I started learning stuff, I'm like, why does nobody tell you about this? Okay. I would have loved to have learned about it earlier. You probably would have too. All right, so it's really geared to, we've got some new teen accounts we've set up or can set up for 13 to 17-year-olds, giving them some limitations in what they can trade, but being able to start building off some simple principles. So on Thursdays at 4 o'clock Eastern, so this will take place this afternoon. It's a shorter class. It's just like 20 to 25 minutes is all on specific topics, and they're going to rotate. So Rachel does a fabulous job with it. She's been there the last 2 weeks. Today's going to be Alex Coffey. You might be familiar with him. He is going to be doing the class today. So if you have kids or grandkids that are like, yeah, they really want to start learning how the markets work as well, this would be a fantastic resource. Now there is a series here that Rachel and Alex have done. And after each little video, I'm starting you out here, I think on this one. They're linked to each other and you can just go through one after another, right? 1:30, 2:13, 1 hour, not a 1 hour, 1 minute and 10 seconds. These are just kind of some short little blurbs. And then when you join those classes on each week, it'll kind of work through that in more detail. All right, so share that with anybody you think that could enjoy that and use that. I'm going to share a couple of links with you. Okay, so I'm going to share this link to this first video here. And then I'm going to share a link to this one that Alex did. All right, so this one's a short one. The other one is Rachel's class that she started 2 weeks ago. So first one is the webcast. This second one is this actual link where Alex starts out this little series with these very short videos. All right, any questions on that? That is enough for the moment. Okay. Who's that good-looking gal? That is one of our coaches, Rachel Dashel. She is one of our newer coaches, and she's brilliant. She has a CMT and a CFA, and very super knowledgeable about things. If you follow her on X, some of you have started to do that. She posts some really fun things in X as well. Okay, we need to put on some new trades. I think we're going to not be able to get to NVIDIA. I'm going to see how I might address that. But we do want to put on some new trades here today. So let's get back to it. All right, first up, we are going to do, let's go take a look at this chart, see if it still looks decent. I have several to look at here, or several ones that I was looking at, I should say. All right, Abbott Labs. They announced their earnings. Looks like they did that earlier today. Yep, they announced before the market opened, and it's a nice kerplop down. Okay, you could see how it was just bouncing off the 10-period moving average, bouncing down. Nice little drop here. Looked like it tried to rally back earlier in the day, and it just got fizzled out. Okay, so we are going to do a directional on this one of a long put vertical. If we go back a year, let's back up here, you'll see, man, this is the lowest price all year long. Okay, let's go to the trade tab, and on Abbott, we're going to just come out to the May 15 contracts. They're the most liquid. You can see lots of open interest, some volume activity here as well today. Price of the stock is sitting at 97.17, so we're going to use the 97.50. That's going to be our at the money strike price, and we're just going to do a $2.50 wide spread. Okay, so we're just going to say buy vertical, and it's going to cost us $1.03. I'm going to go ahead and lock in on that so that we can use the numbers here. And on that 103, if we take the difference between the spread and 103, that's going to tell us what our potential max gain is. Okay, so I'm going to go 2.5 minus 1.03. That means we have a 147 we could potentially gain on this. I'm just going to write 147 out here. And by the way, this stock is on our list. 1.47. Of that, what percent would you be satisfied at? Would you be satisfied if we had 50% of that? Would you be satisfied at 60, 70, 80? Some of you might hold it out for a long period of time. In this one, because we can risk $2,000 per trade, we really can do quite a few contracts here. Okay, not quite 20, it could end up about 18 or 19. But what percent would you be satisfied? We are risking a lot less than what we have to gain, which maybe sometimes gives you the idea, well, I don't need to get that much out of it. I don't have to try to milk it for all it's worth. What if in this case, we did it a 60%? Okay, we get 60% of a $1.47, we would be happy campers, would want to have an exit out of the trade. You guys have seen enough of our long verticals in this class that a lot of them will hit that target pretty early and we're out. Okay, so let's go 1.03. That means we'd say get us out at $1.91. Okay, so I'm just going to write $1.91 here. And then how many contracts could we do here? We can risk 2,000 in any trade. Let's divide that by our risk of 103 per contract. We can do 19 contracts here. All right, so that is what we're going to do. Let's see, we've got 70, 50, 50, 50. So a lot of you are content to say, don't milk it for everything, just get a chunk. Get a chunk of it, get 50% of it, and be on your way. Well, we're close to it on this one. We're doing 60%. So let's put in our first trigger sequential, create an opposite order, and we're going to go buy this back at $1.91. We'll be happy campers there. Let's make this good till cancel. Maybe we'll be out of it by the time we're together next week. Maybe we won't. We'll see. Market is going a little bit more bullish right now, right? We looked at the S&P and the NASDAQ having new all-time highs. However, if they are going to maybe slow down a little bit here, which many times we'll see after there's a new market high, it kind of pulls back a little bit, then we might be able to see a little bit of weakness continuing on this stock, okay? So we're going to put it in our diagonals and long verticals bucket. All right. I want to put on a diagonal trade with you today as well. I want you to come look at this chart with me. Let's come take a look at Walmart. Now, as we look at Walmart, it too is on our liquid options watch list. Oh, good. We just got filled on that. Nice. Does it look like it's making some big moves or smaller moves in the more recent history? You know, it had this nice flagpole, flag pattern, broke out of it, and it didn't really continue. Man, that was a nice strong breakout that day. And the target based on the flagpole height is clear up there. But what has the stock done since then? It's just kind of gone a little bit more sideways. Now, would you consider it a little bit more bullish or a little bit more bearish? Well, it's under the 10-period moving average, but it is above the 30. And probably what I'd take for a guide here is I would say, well, here's a low, here's a higher low, here's a barely higher low. You know, if we went ahead and connected the low peak points there, it definitely is heading up. So we're going to be a little bit more bullish on this one for that reason, because those lows keep getting a little bit higher and a little bit higher. Okay. In this one, we're not going to expect a really big move. In diagonals, we're looking for shorter movements, smaller movements, okay? So what we're going to do here is we come out here to the trade tab. We're going to come out, we're going to pick our long leg first, okay? We're going to go out to the June options. It gives us a couple months to be long in that option. We might not use all that time, but we might, okay? And I had picked out here, let's see if this still makes sense, to do the 125, which is kind of our at the money price right now. So we're going to do the June 18, 25 as our long leg. What about our short leg? We're going to sell, and this is the idea that we're hoping every week, because it has weeklies, to maybe capture some profit, reduce the net debit of that longer dated option out in June, and then do it again the next week and the next week and the next week. Okay. These diagonal trades can, depending on how you do them, can keep you really busy. All right. We're going to go out to April 24. We want there to be some time to sell. And my anticipation is that we will be rolling it next week in class, unless something happens and the short leg that we sell here is super low in price, and maybe I roll it a day or two early, but I'll come back and show you what we were looking at, kind of like I did with our Alibaba trade, or our diagonal from last week that really took off on us on Amazon. Let's go here. The stock's at 124, kind of going a little bit more, kind of more sideways. We want to go maybe slightly out of the money here. Let's go with the 126. So we're going to sell the 126. We're going to say buy diagonal. System doesn't know which contract we had in mind. We have to tell it. So we're going to take this May 1st out to June 18th. And then we're going to change that strike price to, we're going to change that to, I think we decided the 125, right? That's where it's kind of at the money. 25. Let's make this 127 instead of 126. Let's go a little bit further out here. Okay. So we're $2 out of the money-ish on that one, some odd cents. And we're going to treat this, what our hope is, we're going to hope for a lot of time decay to help with this short option that we sold here. We would love for the net debit to eventually be dropping over the next week, and then be able to buy back the short leg this April 24, and then sell another one against the June leg. That's going to be our plan with this. I'm going to send, oh, I didn't do contracts. Let's do 2 contracts here. We actually could do 3, because we can risk $1,500 in this trade, but we shouldn't do 4. That would put us beyond the 2,000. So we'll do 3 contracts here. We're going to hit confirm and send, and we're going to send it to our grouping where we keep track of the trades in this class. Looks like we just filled on that. All right. Looking through to see if there are any other questions. Thank you, Barb, for helping me out. There were quite a few questions there today. So everyone, I appreciate your attendance, appreciate you being here and asking these clarifying questions. I can tell some of you are being really active at trading this strategy in your paper account, so you're getting more comfortable with it. Okay, I'm happy to see that. So my ask of you today is, number 1, fill out that survey in the chat. If you want, just do the 2 questions, boom, boom, you're done. But if you write anything, promise you, I will read every word you write. Our manager, Scott, a lot of you know Scott, he will read every word that you write as well. We love to have your feedback. Okay, if this class was helpful for you today, go ahead and hit a like on your way out of the class as well. Make sure you subscribe so you can find our content. Makes it super easy. And then Barb and I would love a follow. Barb Armstrong CS, Connie Hill CS. Now, coming up next, right at the top of the hour, is going to be investing in dividend stocks today. So take a quick break and come back for that class. We'll see you next week following up on, oh, do you know what? I will not be here next week. Barb will be here next week. I'm going to have to give Barb some notes if I do anything without you. Okay, thanks, everyone. Have a good day in the markets. Bye-bye.